Hi and welcome back to my channel. We had a huge week. I hit my biggest milestone yet, past 100 subscribers. Thank you so much for the support. And in other news, my portfolio is now back in the green. It took a couple months, but I'm back above the value that I started at. My total investment is now $5,300, so I'm up about $77.69. As we can see, on the day, up a little bit. On the week, up 4.5%. On the month, up 8%. Over the past 3 months, up just over 1%. Over the past year, up 1.17%. And of course, all time now up 1.47%. As we can see, steep drop off, great recovery. Super excited about that. What did I do with my $150 investment this past week? I bought $25 worth of Bitcoin. That $25 bought me 0.00276 Bitcoin at a total cost of $25.01. My new position is about now 0.1380861. My price per unit on that new purchase was $9,052.05. I'm very excited about Bitcoin. And my other purchase was a second share of Walmart. I now have 2 shares of Walmart, as I said, and the purchase price on that second share was $129.36. Very excited about that. Next up, I have an article talking about why the recession that we may be seeing now could be worse than ever before, and what's different about a coronavirus-induced recession. Here we go, we have an article from Forbes titled How the Current Coronavirus Stock Market Compares with Great Depression and Great Recession Markets. The spread of coronavirus pandemic and turmoil in the crude oil markets caused the Dow Jones to crash by over 37% between February 12th and March 23rd. While the markets have recovered considerably, the Dow has risen over 30% from its March 23rd lows. The worst may not be over yet as the economy slips into what appears to be a deep recession, with unemployment also soaring. So here they're going to compare the Great Depression of 1929. As we can see, 89% peak to bottom decline. Black Monday of 1987 down 31%, the 2000s recession down 34%, and the Great Recession down 49%. So here we can see the peaks of these crises. So the Great Depression, 29, Black Monday, 87, 2000s recession in December of 99, and the Great Recession in 2007. The key here is that all of these different recessions had different peak times and market bottoms. So here, Great Depression took almost 3 years, Black Monday took a couple months, 2000s recession took 3 years, and the Great Recession took 2 full years. How big was the sell-off in the Dow Jones throughout the various market crises, and how many months did it take to get to the bottom? The Great Depression was the most severe stock market crisis to date, with the Dow plunging 89% from its pre-crisis peak. The decline occurred over a period of 34 months. Great Recession saw the markets fall by 49% over a period of 16 months. In comparison, the Dow fell 37% from February 11th to March 23rd, a little less than 1.5 months. As we can see, the recovery. How many months did it take for the market to recover? The markets took about 25 years to recover to the pre-crisis peak after bottoming out during the Great Depression. In comparison, it took 4 years after the Great Recession of 2007-2008, and a similar amount of time after the 2000s crash. As of May 22nd, the Dow had jumped by over 30% from its March 23rd lows, but still remains down by about 17% from its pre-crisis peak. Here we go, the NASDAQ. It says technology-focused, has fared better, remaining in the green year to date. Of course, we know that these tech-heavy companies are going to fare better in a market recession because of how they're structured. How much did the GDP decline through various crashes? GDP shrank about 27% through the Great Depression and 5% from the Great Recession of 07-08. The economic fundamentals of the COVID crisis are looking far worse than the previous recessions. US GDP shrank by 4.8% in Q1, and a contraction of over 30% in Q2 appears likely. This is going to be the big problem. People can't go to work because of the restrictions. Things are slowly starting to open up, but people literally cannot go to work. That's the most terrifying part. While the equity market's been upbeat over the recent weeks, the eventual recovery in the US economy and its timing hinges on the broader containment of the spread. Our dashboard forecasting COVID-19 cases with cross-country comparisons, analyzes expected recovery timeframes and possible spread of the virus. Of course, I will link this article down in the description of the video. Let me know what you think about the article. As I mentioned earlier, I hit 100 subscribers this week. I'm posting a super special video to mark that 100 subscribers early next week, so stay tuned for that. It should be my best video yet. And that means don't forget to subscribe, like the video, and comment down below what you want to see next. Now getting into my portfolio, we'll talk about SPHD, this of course being my largest stock or ETF holding, down $84 on this all time now, which is not good. I have 17 shares on the day, as you can see, did not fare well. down about 1% over the last month. Over the last 3 months, down 12%. Over the past year, down 17%. Over the past 5 years, only up 1.43%. Of course, I always talk about this one because of the extremely high dividend, but the S&P 500 has not fared particularly well. The stock market is recovering, and this has lagged behind, which is frustrating. Let me know, should I buy some more? Should I sell? Should I hold what I have? This is definitely one of the more concerning holdings in my portfolio right now. Next up, we have another interesting pick, Vivint Solar at $7.55. My total return is now up $40.54. Of course, their last earnings call was not stellar in the slightest. They've missed earnings expectations the past 5 quarters, or rather the past 6 quarters. This is extremely frustrating, and I'm not sure what to do about it. That being said, the price continues to go up, so I can't argue too much. I've talked about purchasing Enphase Energy, but of course, comment down below what you think I should do. Over the past month, we can see up almost 19%. Over the past 3 months, down 30%. Over the past year, up 14%. And over the past 5 years now, down 50%. It's been all over the place, and it's definitely a pick to continue watching. Another one of my huge holdings in my portfolio is Coca-Cola, now trading for $47.10, down $45 on this one all time. I was actually wrong. In one of my previous videos, I talked about how Coca-Cola should fare decently in a recession, but of course, with restaurants being closed, movie theaters being closed, sports arenas being closed, soft drink companies have struggled. So over the past month, we can see pretty much even. Over the past 3 months, down 13%. Over the last year, down 3%, but over the past 5 years, up 15%. We can see, as I always like to talk about, very consistent growth, good dividend here. The big issue is the fact that they had that large sales drop-off. So if we go down to their earnings, we can see for Q1, it wasn't bad at all. Q2 will be very interesting to see July 21st. Of course, I mentioned Walmart earlier in the video, trading for $123.49. I have 2 shares here. My average cost is now $121.86. I like this one. As that Jim Cramer article said that I showed a couple weeks ago, he believes Walmart will continue to do well because they are so focused on low prices and really consistency in the market. So total return is not great, but it does pay a decent dividend, and it's going to be a pretty safe bet. So over the past month, down 0.01%. Over the past 3 months, up almost 12%. Over the past year, up 21%. And in the 5 years, we can see up 63%. I really like this one, and I'll continue to buy more. And my last stock pick for today is Penn National Gaming, trading for $31.30. Total return is now $62.44, up 66%. I believe this is actually my best performing stock at the moment. Of course, I'm very high on Barstool Sports. I always like to talk about it. On the month, we can see up 76%. If we scroll back to the week, we can see they're up 7% on the week, even with today's decline. Over the past 3 months, up 13%. Over the past year, up 53%, and over 5 years, up 87%. With casinos starting to open back up across the country, things are going to look a little bit better for them. The key is going to be how fast does sports come back? And that's an answer that I do not have yet, but I'll continue to buy Penn National Gaming. Last is my largest holding. My equity is now $1,300 in Bitcoin. Average cost is $9,090.20. And as I mentioned earlier, quantity of 0.138 Bitcoin. Makes up almost a quarter of my portfolio now. As we can see, up almost 4% on the day. Over the past week, up 5.86%. Over the past month, up 21%. Over the past 3 months, up 10%. Over the last year, up 9%. And over the past 5 years, up almost 4,000%. I keep talking about it. I'm going to buy Bitcoin every single week. And of course, I will sell that off at the end of December of next year, December of 2021. Let me know what you think about my picks and what you want to see next. I'll be back with another video, like I said, early next week. Thanks.